Good morning, it's Wednesday the 26th of April. This is the Phoenix Blue Update brought to you this morning by Tom Colley. Yesterday in the markets we saw the result of the French election playing out to a greater extent. We had seen that big opening gap in a lot of markets on Monday, but through Monday it had been very quiet. Yesterday we saw euro strength playing into the market, and we saw a general risk-on environment. We saw stocks rising and safe havens falling. Okay, let's just have a look at the news next before we go to the charts. News that we had out yesterday, we only had one red flag news, which was the consumer confidence for the States that came in quite substantially below its forecast. So nothing there to boost the dollar against recent euro strength. Overnight, we've had CPI and trimmed mean CPI on the Aussie, both those coming in around expectation. Okay, the CPI's 0.1% down, but nothing to particularly create any volatility in the markets. Going forward today, we have core retail sales for the Canadian dollar, and we also have crude oil inventories out of the States, which will obviously also affect CAD. We'll have a look at the CAD chart in a moment. Significant event yesterday was the US or Trump's administration announced a new 24% import tariff on Canadian softwood imports. In addition, he tweeted that Canada has made business for our dairy farmers in Wisconsin and other border states very difficult. We will not stand for this. Watch! ! So clearly, as Trump's 100 days come to first 100 days come to an end, he is sending some clear signals to Canada that he considers certain aspects of their business between the two countries as being unfair, and he will act unilaterally on those. That clearly had a significant effect on the Canadian dollar, and we'll have a look at the chart later. We also are expecting an announcement on taxation from the Trump administration. Again, he said that Wednesday of this week he would make an announcement about taxation plans. We don't expect this to be detailed. It will be more a general picture looking towards achieving the changes towards the end of the year, or getting the changes approved, should I say. The headline of that, the press believe to be a reduction in corporation tax to 15%, which is a substantial drop and clearly would have a significant effect if it came into force. How the markets will react to that, I think possibly stock markets will rally on that type of announcement. I think currencies are going to be a little less responsive to it, bearing in mind it's a very general announcement. Okay, over to the charts. Dollar index, we've talked for the last, or this week, we've talked about price on the dollar index being below a key level at $99. It's broken below this long-term rising trend line. We've got a low here, which is the low for the year at 98.60, and that's what's currently being tested today. This box here shows that we've got a COT extreme signal, which suggests the commercials in the futures market are at an extreme position, and we anticipate this to be a bottom in that respect. However, we also always have an opposite side to that scenario. If that level is ignored, and in due course at the same time that commitment of traders alert is ignored, or extreme position, and price breaks to the low side, we will be expecting a further move to the downside, down to what would be the next significant level, which would either be this low here, or more possibly the low of the US election night. Over on the yen, well, we've seen the US dollar JPY rallying, which means yen weakness. That's classically what we expect in a risk-on scenario. Money is moving away from the US dollar JPY, from safe havens into higher risk areas such as stocks. We've broken through some levels here yesterday without any significant, or without being checked as such. We were looking for intraday levels through there. They just didn't, price just didn't react to those. We now see further medium-term long bullish movements in this market to the top of the channel here being the next significant level, wherever that should fall. Clearly this 113.30 is a significant level, and a potential correlation for the yen. If price continues to move aggressively into that region, that would be an area where we'd be looking for the market to top out and look to take it back to the short side, based on that downward channel. Over on the euro, well, here we can see the move. I showed you this redrawn downward trend line here, and effectively how price had broken above with the gap, retested the trend line, and has yesterday moved aggressively strong through to this 109 type level, and is now overnight has been moving in and continuing to move in a bullish way, and we're coming up to a couple of levels here that we will be interested in. But in this market, our view is really the opposite of the dollar index. We will be looking for long trades on this market intraday. Once we get that, and if we get that break below that 98.60 level on the dollar index, that will put to bed our long-term dollar strength bias. So we're clearly at somewhat of a decisive point at the moment in our longer-term bias. Over on the pound, well, we're still consolidating within this box range here, waiting for the markets to act in one direction or the other. Nothing really to do there, unless you're intraday trading the range itself. We'd just be waiting for the market to give us direction on that, with a close above or a close below that box range. Over on the Kiwi, we had expected this market to pull back to a greater extent. We were looking for this to create an uptrend. You can see I've got an end of day order in at that level through there. That was where we were anticipating price to come to. It hasn't reached that level. It's confined somewhat in this box range through here, where I have an order in there to trade the bottom of that box range, looking to target it back to the top. If that trade fails, we have a COT extreme signal, which is saying that the commercials have reached a position in the futures market which is their most long bias position for over the last 6 months, which is last time we saw that signal, it was there and there. We see a reaction from that normally, so we would expect that level to hold, and certainly price to move through to the top of that range. However, as I've said earlier on the dollar index, if that signal from the commitments of traders is ignored, we will look to trade the market to the downside. If the level or if the extreme position for the commercials remains the same, we will look to trade it down to the next significant level. It is possible that the commercials in the futures market can change their view, in which case we would break the signal that we have, but we would also see the commercials altering their view on the market and switching their positions, so that that signal would then come off or disappear, so we wouldn't have a signal, and that would give us a clearer run to the downside if that's what the market decides to do. Over on CAD, US dollar, Canadian dollar, we have clearly been testing this 1358 level. This is about a 14-month, 15-month high. Price broke through yesterday, quite possibly on the news we've mentioned about new import tariffs on lumber between the US and the Canadians. We've also got that issue about dairy farming and what Trump tweeted yesterday. So clearly we've got a test of that level. Once again, we've got a cut extreme signal at this level, and the same rules will apply. We've got also today, we've got retail sales, as I've mentioned, and crude inventories out of the US, both that clearly can affect the Canadian dollar. So we could well see a break and close above this level by tomorrow or by the close of the markets today. That again would be the market ignoring the commercial position and the commitment of traders, and would give us the signal to trade this market to the long side until the next significant level, if the alert or the extreme alert from the commitment of traders remains in place. Obviously, contrary to that, if we get a reversal from that level, that will give us the opportunity to trade this market back down to the short side, although as you can see it has been somewhat unpredictable over the last few months, so it hasn't been a market that we've concentrated on. We were actually watching this very level yesterday intraday, looking for reversal signals at that level. We didn't see them, and price clearly broke through quite hard towards the end of the day before pulling back. Finally, over on gold, we've talked about the risk-on scenario, money moving out of the safe havens. When I spoke about this market yesterday, we'd seen price reject this downward trend line or the top of this triangular formation here yesterday. Clearly, we had an engulfing bar yesterday, which effectively negates that. So we have price just above what I see as a key level of 1260 here. Any break below that, combined with a continued risk-on scenario with new movements to the long side on stocks, etc., with the S&P 500 approaching its record high, the DAX already, as I mentioned yesterday, having taken out its all-time high. We could well see the risk-on movement and significant play to the downside here, and a break of the bottom of this triangle formation. Okay, that's it for today, guys. Reminder that the next free live trading event is due to the 9th of May. If you're interested in that event, go to the website and just contact us through the contacts page. Details of the website will appear here in a second. Okay, thanks for listening, and we'll talk to you again in the morning. Goodbye.